Welcome to Theo Trade. This is Don Kaufman. It's April 10th, 2019, and you are watching the Theo Trade evening video. S&Ps today close up 12, but that's not what's on my mind. What's on my mind is this was a central bank kind of Wednesday. We heard from both the ECB, that's the European Central Bank, of course, run by none other than Mario Draghi. We also heard from the Fed minutes. What did both of them say? Absolutely nothing, and really kind of left the markets largely massively unchanged. To get really specific, so the ECB, as I said, the European Central Bank, they came out with their announcement today right in this time frame here. It was actually specifically, it was about 4:45 a.m. my time, and the market slipped just a little bit off that. Why? Because I think the markets were kind of anticipating that Mario Draghi was going to do something. Quite frankly, I know I was anticipating that Mario Draghi would do something. But then, I sat back and I thought a little bit about it, and I said, what are they going to do? The interest rates are effectively sitting at zero. The German Bund is even in negative interest rate territory. For the European Central Bank to come out and do something now, that would be kind of screaming like, we're on fire and we're going down. So what do? Well, the ECB, again, holds policy kind of steady. Again, I was a little surprised by that. Then we had the FOMC minutes. Now, the FOMC minutes, when did they come out? You can't even tell by looking at this. That's how dead the S&Ps happen to be today. And I'm sorry. I'm sorry to have to be the one to tell you this, but look at this. So the Fed minutes come out right here. We didn't even substantiate. We didn't even substantiate 3,000 contracts the minute that the Fed actually released, their minutes. That's just sad, people. You have to realize the minutes are immediately read by algorithms. You know what the algorithm said? Well, I did find something interesting inside of the Fed minutes because I read through them. It basically said, well, we're going to look at how the U.S. economy goes, how the world economy goes, and we're willing to raise or lower. Where did that leave us? Absolutely nowhere. And then, and you're looking at the S&Ps, you're like, well, then why are the S&Ps up 13? China deal. So trade war. Apparently the trade war is about to be over with China, but that's okay. We're probably going to spark one with Europe here momentarily. Nevertheless, Secretary of the Treasury ultimately said, we've got ourselves a deal, and the S&Ps have rallied off of that to a degree. Now, all of that being said, one thing I do want to kind of highlight today has got to be the Russell. All right, so we're going to take a little bit of a broader look at the Russell. Now, recognize that yesterday the S&P sold off. The Russell sold off yesterday. It regained every single ounce of that today. Okay, take a look at the S&Ps, the exact same thing. We sold off yesterday. We regained every single ounce of it today. I mean, almost to the point. The S&Ps rallied back up. Now, again, I'll come back to the Russell here momentarily. The NASDAQ, however, actually trenched a little bit higher. So the NASDAQ is actually, again, up in kind of nosebleed territory right now. And it's actually going to be one of the themes here in a moment is, how overbought is this beast right now? I'm going to try to come to a little bit of a conclusion here momentarily. So with that, again, everything we gave back, we regained yesterday. But there is some interesting movement on the front that you need to be aware of. Number one, the bonds, they've started to head higher, okay? Is this a sign right now of a little bit of risk coming back into the marketplace? Because if it is, I mean, please tell us, if risk is going to come back in the marketplace. You guys know I have been discussing the bonds pretty much ad nauseum. This rip to the upside, of course, then the bonds selling off. And I told you the bonds selling off were going to fuel the financials to the upside, and it absolutely did. But the moment, again, these bonds start to head higher, okay, they have the capacity to explode higher from here. That would probably put the financials on its back and ultimately hurt the entire marketplace. Now, looking at the bonds autonomously, it doesn't tell us a whole lot. It just doesn't tell us a whole lot. I mean, yes, the bonds are starting to rally back up. Okay, in the days to come, we want to see if the bonds really can take off to the upside. If they do start to take off to the upside, it is going to put pressure into the XLF. Now, for those of you, again, if you've been tuned in for months, even years, I've been talking about the 2650 level literally for years inside of the financials. The irony of today? Well, the financials pretty much closed at 2649. Close enough for you? It's a key inflection point inside of the financials. Again, the financials yesterday kind of got rocked, rallied back up. Today, they got rocked and kind of rallied back up. This is, again, this is a kind of similar situation. But for the time being, the market, it needs the financials to fuel it. And I want to be very, very clear about this. The financials need to be involved, okay, to the upside for the S&Ps to actually fuel all the way up to the next gravity point. Where's the next gravity point? 2911. The financials are going to have to be on the forefront of that. Why? Why do I say that? Because you've already got technology. I mean, technology is in, as I said, this thing is in nosebleed territory. I mean, you haven't had a down day. Look at this. I mean, you're starting to get to crazy, 1, 2, 3, 4, 5, 6, 7, 8, 9 days. There's not much red on that screen over here. We're starting to hit record turf. And that's why, again, the theme of this video is, how overbought is overbought? Like, how overbought are some of these stocks? Which, again, I'll come to momentarily. There's one other aspect that really strikes me. So we know that if the S&Ps themselves are to continue to rally, it's got to get done here. It's got to get done inside of the financials. Okay. We know that by, in large in part, the bonds are going to be what is going to influence those financials. But there's one other interesting sign on your screen right now. I think a lot of people probably are forgetting about it. It's called the VVIX, the volatility of the volatility index. What does it tell me right now? I don't know why and I don't know how, but somebody's buying volatility out there. All right. I just wanted to show you this. So this effectively, it doesn't mean, and I like to mention this, this doesn't mean that the marketplace is going to tank. Okay. What it does mean, professional firms are going out and they're buying volatility in the VIX options. I'm going to say that again. Professional firms are going out and they're buying volatility in the VIX options themselves. You're like, how could you possibly know that? Because the VVIX, the volatility of the volatility index. Now, you're not going to see this like, if you look at the VIX, you're like, but Don, the VIX is down a point. That's because everybody's watching the VIX, meaning that traders, they don't go into the SPX. Listen, the VIX, all it is, okay, is representative of what? Okay, the volatility inside of the SPX. But everybody knows that. So then everybody watches the VIX. So now traders, they get a little smarter, a little cuter. What do? They go out there and they buy volatility in the VIX itself. Why? Well, because not everybody necessarily is watching that, but I do. I do effectively watch that in the VVIX. Okay, normally I wouldn't mention it all that much, but it has come from, roughly, let's call it the 80 handle all the way up to the 90 handle. And if this continues, okay, something's up. Again, it doesn't necessarily mean the market's going to tank, but it's a shot across the bow, if you will, and you should effectively pay attention. Now, in any, if there was going to be a big down day, look, one big down day will spike the VVIX and then it'll retract immediately. But what's interesting is the last couple of days, these haven't been big down days, and yet they're still buyers of volatility. So we have a couple of just tiny signs kind of emerging of somebody smells something, okay, that isn't right. Why? Because they're buying a little bit of the bonds and they're out there buying the VVIX. And again, the financials haven't played forward roles in this, meaning that, okay, the fact that the financials are stalling out, we're seeing a little buying of the bonds, we're seeing the VVIX, a few of those things kind of add up, and it doesn't exactly make me feel so warm and so fuzzy at this time. All right, remember, if we're going to go up, okay, the next kind of, demarcation point would most definitely be 2911. Again, 2911 side of the S&Ps. All right, switch gears for a moment. So, as I said, kind of the theme of this is how overbought are these stocks? Well, we could spend all day looking at a chart. All right, you pull up Apple here. Look at Apple. I mean, an absolute tear, tear to the upside. And we've got this TheoTrade RSI. This is an RSI Laguerre, okay, with it's the Laguerre polynomial. It doesn't actually include time. And there's also some fractal energy in here. So if you guys are into fractal energy, obviously this is fractal energy. Now, listen, I am not a big market technician. In fact, I don't really typically use a lot of these indicators. All right. Over the years, I helped extensively, okay, in building some of the indicators, though, on Thinkorswim, along with Jeff Bierman and a few others that actually work here at TheoTrade. Remember, we come from TD Ameritrade, and even before that, we come from Thinkorswim. So we're intimately familiar with this. But the RSI Laguerre, it's like an RSI. It's overbought, oversold, okay? And then, of course, fractal energy is just showing, is there, if you will, the capacity for movement to kind of continue. Now, I could spend all day, and I'm not going to poke fun at charts, even though I'm an anti-chartite, but I could spend all day just looking at this. And, why use a daily chart when you can use, for instance, like a 3-year, right? The weekly is going to trump the daily. Anyway, you can see overbought. Look at this. The fractal energy's all run out. Okay, we can go on to Amazon. You want to go to Amazon? Let's have a party. Let's go to Amazon. Yeah, it's overbought. Well, the fractal energy here hasn't necessarily run out. What do? You go to Google. Okay, from Google, what else do you want to go to? I mean, come on, we can go to anything you want to pretty much on the screen that's involving technology. All right. Hey, maybe we should just go to technology itself. Pull up the cues. All right. Oh, look at this. Overbought. The fractal energy has run out. But that's not what I want to do. What I want to show you is actually fairly astounding. Okay, I don't typically look, all right, at markets, when we talk about like overbought, oversold, I don't look at this in the classical representation of like a Theo trade, like, RSI Laguerre. I don't necessarily look at, MACD, Fibonacci, throw a Bollinger Band on there. It's not going to do it for me, okay? I optimize everything by scanning. All right, and again, I'm using Thinkorswim over here. Why? Because the scanner is really, really good. And when I say I optimize everything, all right, to keep myself consistent, like looking at an RSI isn't exactly going to keep me consistent. Looking at a MACD, first of all, a MACD isn't even consistent from one stock to the other, although there is actually a way to normalize the MACD, and I've got a study for that. Nevertheless, okay, I just go to the scanner, go to the stock hacker right over here. I'm scanning only in weeklies. I don't want to scan S&P 500. I want to know everything that is weekly options, stuff that's a little bit more liquid, stuff that's got some, some meat behind it. When I say meat, I mean market cap, volume, liquidity, something that's there. And I want to see price change, okay, is 70% greater than 365 days, which is bars ago. Now it's a party, okay? Now it's a party. By the way, these bars, 365, that's not really the proper way to do this, because technically the way that the scanner works is only on trading days. So in theory, this would really be 252, because that's how many trading days there are in a year. You could change it, and I just wanted to actually differentiate. It's one of the reasons I left it in there, okay? And hit scan, and there's 19 products that just came up in my scan that are up 70%, okay, in the last year. AMD, okay, there's AutoZone, Chipotle. Look at this thing, a 718-pound burrito that might not be able to get guacamole soon. But Lulu is on here, Roku is on here. I can go on and on and on. Now, again, the more you actually bump the scanner up, and I could just come in here, toggle this, or I could just let's just get this done. Just put 90% in there. We talk about like how overbought is something. Look at this, Go Fish. This is 90% over 252 trading sessions. Okay, it's absolutely staggering numbers. Now, all I have to do then is click on here, and it'll actually bring up AMD directly into my chart. Overbought, the fractal energies. Why am I going through this? Like, why am I emphasizing what's overbought? Okay, I've been talking a lot lately about risk reward, and at times like this where you're like, oh, it's getting ridiculous. Okay, what's getting ridiculous? I mean, let's cut to the chase over here. You look at stocks like AMD, or I'll just give you a quick example. You look at stocks like Apple. Okay, and Apple didn't even come up in the scan, but you look at stocks at Apple, and like Apple on a year-to-date basis. How in your right mind do you look at this and like, oh yeah, I got to have me a piece of that? The stock has gone from 142 to 200 straight up. Okay. Do you really feel like, oh, I got to have a piece of that? It's up 30% year to date with this kind of market cap. Okay. At some point as a trader, yes, you can get bullish in this, but if you're going to get bullish, okay, the strategy that you employ, okay, better be defined risk. Because if you go and just outright buy this stock, I'm telling you, okay, what's unfortunate is so many retail clients, they're going to get their heads taken off in this. Speaking of retail clients, and again, all I wanted to do in here is overemphasize, like, I have run scans like this, 90% over the last year, okay, hundreds and hundreds of times. And I've never seen this many underlyings come up at one time, ever. Not for 90%, a 90% move, okay? I mean, granted, again, we're in unusual times, but some of these stocks even have decent size market caps, all right? When you start looking at this, like, stocks that are up, for example, 50%, okay? 50%, there's 37 stocks. Now I'm looking in the weeklies list, and you might question, like, well, how many stocks are even in the weeklies list? Watch, okay? How many stocks are in the weeklies list? Scan, there's 539 stocks inside of that weeklies list. I mean, we're talking significance when we're looking at the number of stocks that are up okay, these staggering amounts. Couple things, again, to kind of keep in mind. Keep the strategy. If you're going to be bullish right now, keep the strategy defined. Again, keep that strategy defined out there if you're going to be bullish, especially when playing in here. Now, I myself, I look at stocks like this that are exploding to the upside, and I'm ever the contrarian. And I'll use an example that came up on this list, which was none other than AMD. Now, AMD, don't worry, it's only up 50% on a year-to-date basis. Doesn't look like that much when it came off the 32 level. Nevertheless, explosive to the upside, earnings are coming out. We want to keep your head intact, okay, on underlyings like this, okay, and not get clipped when these stocks that are, again, check out this Theo trade like RSI. Not only, okay, is it overbought, but it's actually coming off right now, some of those overbought levels. This is like, your sell sign, if you will, in the Theo trade RSI. Again, I am ever the contrarian, okay? Regardless of which way that you want to take advantage of these, stay defined risk, keep your head in the game. Thanks, everybody, for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.